and I'm delighted to welcome all founders, innovators, and members of the startup community joining us here on Zoom, as well as those watching us live from the official SIIC IIT Kanpur YouTube channel. So we are live on the YouTube channel also. Today's webinar focuses on one of the most crucial yet often overlooked areas for early stage and early growth stage startups and founders. The topic is Startup Finance Mastery, a founder's finance toolkit for sustainable growth. As startups scale, financial clarity becomes the backbone of sound decision making, whether it's budgeting, cash flow planning, managing valuations, understanding compliance, or prepping for fundraising. Founders often feel uncertain navigating financial concepts, and today's session is designed to specially help you with these complexities with practical and founder friendly insights. We are honored to have with us today our mentor, CA Prachi Jain, a seasoned finance professional with over 15 years of experience across private equity, venture capital, corporate finance, due diligence, and strategic advisory. She has worked extensively with startups, funds, and enterprises, helping them build strong financial systems, enhance investment readiness, manage investor relations, and make informed financial decisions at every growth stage of growth. Her expertise covers financial modeling, valuations, fundraising preparation, compliance and governance, cash flow planning, and long term financial stability. Ms. Prachi Chen is also a trusted mentor across several incubators and startup programs, guiding founders not only just how to raise capital, but more importantly, how to manage it effectively. Her insights will be practical, structured, and deeply aligned with the realities founders face, making her the perfect speaker for today's session. Before we begin, a quick note for all the joinees here. Please feel free to share your questions in the chat box throughout the session. We will take them up during the Q&A segment towards the end. With that, it is my privilege to invite Ms. Prachi to begin today's discussion. Prachi ma'am, over to you.
Thank you, Vatsala, for the kind introduction. It really meant a lot. And my journey with IIT, SIIC IIT Kanpur has been incredible. Love the kind of work you guys are doing. And I'll just share my presentation today. But I know this is something which every founder, I've seen more than 2000 plus entrepreneurs throughout my 18 plus years of journey in PEVC. But when it comes to finance, I don't know, there is some hitch. They know their business well, but they say, oh, we don't know our finances very well. But I think that's the outcome. That's what people are investing in you. And even if you don't like it, that is something which you really got to do it. Of course, another thing is that if you have never had a finance background, right, if you are an engineer or you're building product which is in no way connected with a commerce industry, then it becomes a little difficult to figure out what it is. And there is always that like no confidence among the founders, promoters, co-founders when they talk about their numbers. But I think that's the hook. That's where the investors get interested in, because actually they're investing in so that they can get good returns. So today I'm here to tell you all those things. I'll try making the jargons which the investors use be very simple for you. Be open to ask questions. We can take all the questions at the end. But if there's something which you're not able to understand, happy to take in between as well. I've tried covering every topic which Vatsala said is important for her people to understand, the startups to know, and we'll try covering that up in whatever limited time we have. So I'm sharing my presentation, yeah? I have to send a request to you. If you can just on Vatsala.
Yeah, Shalia, please help sharing the screen. Is it on, Prachi?
I will just have a look at it, Vatsala. Just give me a second. No, isn't allowing for this webinar.
Just a second. Just give a
Yeah,
second.
sure. In the meanwhile, if all of you can write in the chat box, what kind of business are you in? Just quickly so that I know what to whom I'm speaking with. It's always good to know the names behind the scenes. I'm happy to see everyone's face as well. If you can switch on your camera.
You'll not be able to see them if they switch on the camera. The
Oh,
board
is
is
it?
such.
I'm
Yeah,
so sorry.
we are on YouTube.
Vatsala,
YouTube.
you are the host, so you can allow people to share their screen.
No, sharing is not turned on for me.
Okay, so because many people have joined from your name, I had made one Vatsala Khare the host. I
Okay.
have,
So make one.
So,
I'm making you, exactly you, the host.
yes,
Just
please.
give me.
So
Uh,
this,
yeah, you were,
Vatsala, you're the host now.
Yes, done.
You're done? Okay, let me just share that with you all. Can you all see that?
Yes. Please put it on the presentation mode.
Yeah, is it fine?
Yes,
You
please.
can all see. Thank you so much. So here is our session today, as Vatsala said, and we try covering every topic, every questions which you have regarding this. This is me. Vatsala had spoken about me. I'm a CSCS. I hold a law degree and few other accolades to my name. What is finance? I think finance is the art of managing money, crucial for sustaining and growing your business. I think all of you are in the business for passion, definitely, but ultimately you're also in the business to earn and grow your money, which is very, very important. Because if that is not what your intention is, then I think I will put or categorize you in the category of business which are for non-profit, and that's where you are not interested whether you are generating profits or not. But if you're really in the business of doing commercial activity, then that should be somewhere your outcome. Of course, you can work for passion, xyz reasons, but this should be your forte, and this is where the entire crux lies. So these are the few key concepts which I will be covering today, in addition to revenue model, financial model, so that you know what you got to do. So coming to customer acquisition cost, what it is, it's primarily the cost to acquire the customer. A lot of times investors ask you what is CAC, what is your CAC, right? And that's where a lot of time you get stuck up, like what it is nothing but simple. Every penny, every amount you are spending in order to get a customer becomes your customer acquisition cost, which primarily includes your digital marketing expense, your any other sales expense which you are doing, any other promotional activity. When you combine that together and you divide it by the number of customer, you will get your customer acquisition cost per customer. So this is simple. This is no rocket science. It's a simpler way of doing it. I'm sure all of you must be using digital marketing today because that's the world we are in. So let's say you're spending 10,000 rupees on Google Ads, and by way of that, you can acquire 10 customers. So your cost of acquiring 10 customers, assuming that they are converted into good leads and your paying customer, is 1,000 rupees. Similarly, you are doing ads on Insta, there is a price associated with it, and referral program, or you are doing a marketing on some channel or somewhere else. You just have to divide it by the number of good leads for which you are paying, and that is what is customer acquisition cost. Why it is important? A lot of time people say, why are investors interested in knowing the customer acquisition cost? The reason is very, very simple. If for acquiring a customer which you are selling at rupees 500, you are spending 1500, is it a prudent way to acquire a customer? If someone can say yes or no, I think it's no. Because आप 500 के product के लिए you are spending 1500 rupees. What will you do over a period of time? You will burn your money, and at some point in time it is not sustainable. So you have to ensure that your customer acquisition cost should always be lower than the selling price. I have seen a lot of businesses and I've seen companies shutting down because they always thought, because whenever an investor, whenever you go out and raise funds, there is a money coming in and you are okay spending a lot and lots of money When you spend that chunk of money only on marketing to acquire a customer, that's the worst use of your money. The reason is simple, because one fine day, if you do not get second leg of investors, then your business is closing down because you are burning at that level. So this becomes extremely important for all of you to understand. Assuming there is someone who is selling an EV. Okay, so EV price is 50,000 rupees. If you are kind of spending 1 lakh to acquire that customer of 50,000, then you are doing something wrong. So be very, very cautious about it. In the initial days when you're starting, right, CAC may be slightly higher, but as your business settle down, CAC tends to decline over a period of time. So in my earlier example, I spoke about in Google Ads, you are spending, let's say, 1,000 rupees per customer. As your brand become more sustainable over a period of time, that 1,000 rupees may eventually reduce to 500, 200, and then maybe 200. It's a normal cycle which it will be follow, but extremely important. Prefer ways where the customer acquisition cost is not very high, something like a referral program. If you refer someone, oh, we will give you the small amount of gifts, which is very simple way of just getting it, word of mouth, no expense needed. If your product is really good, it will speak for itself. You don't have to get money for that. So acquiring customer organically is always one of the best way. But because you are a startup, your product is not very well acclaimed in the market, you're still in that phase. Acquiring it inorganically by making those spends is also equally important in today's era. And that's where you have to have a right set of mind to ensure that your CAC is not kind of breaching the what we called as the targets, which we have in our mind. Coming to understanding what is meant by LTV, I think this is the term which has been extensively used by a lot of investors, and they say, hey, what is your LTV? LTV's full form is lifetime value, which also means you got to understand your customer segment. All of you are in the business to sell your product to a customer and not making the best product which is not sellable in the market. So you always have to listen to your customers, their feedback, because if you're not listening to them, your product will become redundant. So understanding your customer is important, which in turn will decide the lifetime value of your customer. What is lifetime value? It typically means that over a period of time, repeatedly, you are buying the same thing again and again. Let me just take a very simple example. Assuming you are buying a soap, which is like a regular everyday product. You are buying an organic soap. You really liked it. Now you know that this is the brand. You will use it throughout the lifetime of your whatever life you have. Assuming generally psychologically patterns change over a period of, let's say, 5 years, 10 years, but just for the sake of brevity, we will think that in 5 years I will buy a product which is an organic soap. If I do that, and that soap is costing me, let's say, 100 rupees, and I'm buying one soap per month, okay, technically 100 into 12, which is 1200 rupees, is what, just give me a second, someone is just reaching out. Sorry. Yeah. So 1200 rupees, 1200 into 5 is 6000 rupees is my lifetime value of a customer. You can apply this formula across, and that's how your LTV is defined. Now, someone will ask me, how does it matter what is the importance of LTV? Importance of LTV is that you know that your product is good and there are people who is buying your product on a recurring basis. Because if every time you have to go out into the market to search for new customers, your cost of acquisition will tend to increase. I was speaking about cost of acquisition declining because the number of customers who are organically buying your product is increasing over a period of time. So you also have to be very, very judicious in terms of deciding which kind of customers you should be focusing on. So you can divide your customers into premium users or basic users, premium buyers, basic buyers, based upon your product category. I'm being very generic here because I don't know in which businesses you are in. Are you making a big value size product or a small? So if let's take for example, if you're manufacturing a car, you will say, Prachi, for a car, people may not change over a period of, let's say, 4 years, 5 years, or 10 years. But if I have brand loyalty to Toyota, every time I'll buy a new car, I will always go to Toyota and buy it unless I have issues with it. So you have to build that brand loyalty over a period of time, and that's why LTV becomes Very, very crucial and important for startups, because that will define how long the loyalty of a customer builds with this brand. Churn rate, as I said, that the opposite of LTV is the churn rate on LTV, which typically means that out of 100 customers I have, if I have a 50% churn rate, which means 50% of my customers are dropping every month, which implies that in order to sustain, I have to have 50 new customers every month. It's a humongous task. On a paper, it looks very simple, but to get, I'm sure as a individual startups owners, you all know how difficult it is to get one customer onboarded with you. So ensure by way of the product quality, the service which you are providing on your product, or the kind of efforts which you are putting on the product is extremely good. You need to have a value proposition for your product so that your churn rate is very, very low. The churn rate increase may lead to change in the LTV number, which in turn leads to decline, increase in your CAC. These are all intertwined, interrelated things, and you have to be very, very cautious. And this is why we have this session, so that you can understand why all these things become really, really important for you. Even though you think that investors are asking these questions, but there is a reason behind why they're asking these questions to all of you when they come and want to make investments into your company. Because if you miss onto all these crucial points, you are missing something which will hit you hard over a period of time, and you'll be burning your cash without understanding what's happening with you. Now, the golden ratio, this I think is typically the golden ratio. Your LTV should be 3 times of your CAC. So, assuming your CAC is 1000 rupees, if the LTV of your customer is 3000, you are in it's a healthy benchmark. You need not worry about it, because you know that you're doing the right things. The payback period for CAC should be typically less than 12 years, 12 months. So you should typically get your CAC back in less than 12 months is the idea. So it's also called as a payback period for a business, but we are just utilizing that similar concept for CAC as well, that you should be able to get back that money from your customer over a period of 12 months. Now, coming to understanding what is a contribution margin and what is a gross margin. So a lot of time, I think a lot of entrepreneurs get confused with what is EBITDA, what is gross margin, what is contribution margin. But understanding these nuances will make you extremely diligent in terms of understanding key how I have to price my product, what things I got to do, and let's just understand them one by one. What is a gross margin? Gross margins are typically calculated for a company as a whole, which typically means your revenue minus all your direct expenses, which we also called as a cost of goods sold, which assuming your revenue is 600 rupees, your cost of goods sold is 300 rupees, then your gross margin is 50%. Gross margin is typically holistically is being taken on business as a whole. All expenses, be it fixed expenses or variable expenses, is being taken into consideration. Someone may ask me, Prachi, what are variable expenses? Variable expenses are those expenses which is directly related to the revenue which you are doing or the product which you are manufacturing. So, assuming you are producing, let's take for example a fertilizer. So, the cost of manufacturing those fertilizers, the cost directly associated with that is called as a variable expense. So if I'm producing less, my variable expenses would be less. If I'm producing more, my variable expenses would be more. Typically, you need a raw material. So raw material is an example of variable expense. Labor to work on it is an example of variable expense. However, if there's a factory situated wherein you are doing all these work, is a fixed expense. There may be days when you are not working. There may be days when you are working at a very low capacity. In spite of that, you have to keep the factory and you have to pay fixed expense of that factory, which is rent. So that is your fixed expense. Gross margin takes into consideration both fixed and variable expense, and it is at the company level. I want you to write this down so that you understand, because as we proceed through, we will understand contribution margin. We will also understand unit economics, because a lot of times people get confused with all these things and they assume it's one and the same thing. In fact, the usage of all these three things are also very different and help you to take a conscious call. So this is gross margin. Then comes the contribution margin. Contribution margin only tells you as well as the investor that you are operating at a level where you are able to take care of your fixed cost, which typically means an contribution margin typically is being calculated on a, you can calculate it on a organization basis also, or on per product basis also. So what is the simple formula of contribution margin? It's revenue per unit minus variable cost per unit. You're getting my point. We have discussed variable cost ahead, which is raw material cost, your labor cost, your overhead expenses, which are not fixed. These are your variable cost. So you have to, per unit, you can definitely take it out. Revenue per unit minus variable cost per unit will give you a contribution margin. So in contribution margin, we are only focusing on variable cost, not taking into consideration fixed cost. And what is the reason? The reason is that by way of calculating the contribution margin, we are trying to figure out whether company is able to manage its fixed cost or not. In my earlier example, you would have seen I spoke about कि फैक्ट्री का जो कॉस्ट है वो तो फिक्स्ड ही है, वो आपको इरिस्पेक्टिव कुछ भी हो पे करना ही पड़ेगा. So by way of doing calculation for contribution margin, I am trying to figure out whether I am able to meet my fixed expenses or not. Because if I'm not able to do that, then I have to seriously think whether I have to go out and raise funds or am I doing something wrong. Example being, if contribution margin at the company level is assuming 100 rupees and my fixed expenses is 120 rupees, which implies that I am incurring a loss at the operational level of minus 20 rupees, which is not in right side. I am doing something wrong and I have to figure out what I'm doing wrong. So this is very important. You have to take that into consideration. As I said, that contribution margin could be calculated on organization basis as well as on per unit basis. So when you calculate it on a per unit basis, it helps you to understand that for per unit, what is the fixed cost which you per unit can cover your fixed cost. This is the example I have put in for your purposes. I think it's a simple formula, but I'm trying to tell you what is the reasons for utilizing it. As I said, contribution margin must be positive and it should be scalable, because otherwise you are into a loss making business at an operational level also. For an investor, it is very, very important that you are making money at the operational level. They're okay when your net profit margins are negative. They understand that there are a lot of indirect expenses like the cost of promoters, the cost of founders, the cost of sales team. There are various other costs which are there. But if you are at the operational level itself is making losses, they would not be interested to make investment into your business. So a lot of time when a startup says, boss, I have a great company, a great product, I don't know why investors are not looking at me positively, I will ask you to go back and look at these numbers of LTV, CAC, contribution margins, because these are what investors are looking at to figure out whether you are operationally profitable or not. Now, as I've already spoken about the difference between contribution and gross margin. Gross margin, I'm just reiterating it for you, includes both fixed and variable cost. Contribution includes focuses only on the variable cost, and it tells how much fixed expenses I can recover. Purpose and usage, as I said, gross margin is primarily for external financial reporting. It is when you report it in a P&L. But when I talk about contribution margin, it is primarily for internal management, plus for you to decide your pricing and production decision, whether I'm taking the right decisions or not. Strategic applications, contribution margins excels at assessing individual product profitability and calculating break-even point. Break-even is extremely important for you all to understand. And gross margin reveals, as I said, the overall production efficiency and profitability of the company. Pricing, I think this is one question. So we have understood the cost part, the LTV, the CAC, the margins. But what is important is that कि मैं मेरा pricing कैसे fix करूँ. मुझे समझ में आ गया, but what are the ways I should be fixing my pricing? It should be cost plus something. Should I have a premium pricing? It all depends upon the product which you are having, and let's just discuss on that. A lot of times people think, oh, pricing is just मैं ऐसे ही कर लेता हूँ, but no, that's not the thing. Pricing is not about revenue. It drives customer acquisition. So a lot of times you will see that a lot of competitors get into a price war. They reduce the prices because they want to acquire more customers. So as a startup, you may also get into the similar phase if you have competitors, a lot of competitors around. So, but you have to understand that you can't be cutting pricing to a level where you are bleeding. So you have to decide your pricing in proportion to the value of the product you're providing. Profitability, poor pricing decisions will ultimately affect your profitability margin, which affects your decision whether you have to go out and raise funding, whether investors will make investments into your company or not, and scalability. Unless you have recurring profits into your business, unless as an investor I can see that this business is scalable over a period of time, I am not going to make investments into your business. So pricing though is just कि कितना मुझे price करना है अपना product का, but it also have a far-reaching impact on your customer acquisition, your profitability, and your scalability. So what are the ways whereby I can price my strategy? Value-based pricing, which typically means that you are charging a price what is being perceived value to a customer. Typically, if a painter is painting something, then it is on the value of a customer what they are perceiving. So typically, if it is only a person would have taken only, let's say, 10,000 rupees to build that entire thing. But in the eyes of customer, if it is 2 lakh rupees, you can definitely charge 2 lakh as the price for that particular painting. But I don't know what category you are in. Assuming you are in the EV category, you are making some EV product. Again, if the cost of your product is only 50,000, but in the market, people perceive that particular EV needs to be at an X amount, you can definitely charge even 1 lakh, 1,50,000 for your product. Cost plus pricing is one of the easiest way to price your product. It is cost, which is let's say 10 rupees, and you say, oh, I want X percentage of margin on that or X percentage something, then that is your pricing. So 10 plus, let's say you add 5 to it, so 15 becomes your selling price. Competitive pricing, we've already discussed when you benchmark it against your competitors, but always ensure that you're not bleeding, you're not going below a particular level. You should know what value you are providing, and you can still charge the price which you want, irrespective as to what competitors are doing. I think that narrative has to be set right. Dynamic pricing is based upon seasonality, data insights, demand. There are certain sectors which are seasonal, primarily in the agri-tech space. So there, based upon the seasons, or there is a concept, travel industry, you can always charge dynamic pricing based upon the period, the seasonality of the business, and it is all based upon your product. You can do that. Unit economics, which is again a way to figure out whether at a unit level, when I say unit, when at a particular per unit product or a service level, whether I'm incurring a profit or I'm incurring a loss. Again, very important for investor to understand whether at a unit economic level, are you profitable or are you making losses? If you are making losses, then they will say, please go back and figure out what's going wrong with you. Unit economics primarily takes into consideration everything what we have spoken about for gross margin, if we are doing it on a per unit basis. Plus, you will also add whatever you are incurring to ensure that you are selling that product into the market. So unit economics take into consideration not only the direct fixed and variable cost, but a few component of a indirect variable cost, which is directly attributable to the product you are selling. So your CAC is also part of your unit economics. So it will get reduced from your unit economics because you're acquiring a customer through that. And when you do that, assuming 100 is your selling price and you are deducting the cost is 50, the other expenses are 20, then per unit basis, your unit economics is 30 rupees, which implies that on a single product, you are making 30 rupees. Of course, there will be other costs also, indirect expenses, which you will deduct, but at least at an operational unit economics level, you are making profit. And that's where I've also tried ensuring that you understand the meaning of unit economics and contribution margin, because there's a lot of terminologies which I'm using so that you don't get confused. Unit economics is clear for you. Contribution margin, we only take into consideration direct expenses. We do not get into consideration indirect expenses, because contribution margin को सिर्फ यही contribution margin जब हम calculate करते हैं तो हमें यही पता करना होता है कि whether कंपनी अपने फिक्स एक्सपेंसेस मैनेज कर पाएगी कि नहीं कर पाएगी. आई थिंक दैट्स द लिमिटेड एजेंडा एंड दैट टू डायरेक्ट एक्सपेंसेस. So coming on to the concept, understanding the three metrics, I think we have discussed a lot on that. I'm sure you all would be well versed with it by now. What is the unit economics? what is a contribution margin and what is a gross margin. Gross margin is on a holistic basis. Contribution margin is very simple. It is your sales minus your variable cost per unit to ensure whether you are able to meet your fixed expenses or not. And unit economics is primarily that on an operational per unit basis, whether you are making profit or not. Very, very important, as I say, these three concepts, which you have to keep into consideration. And your investors will also going to ask you this. So just ensure that you are calculating this right or not goofing up with this. Yeah, so I think it's all about profitability. Common mistakes, I think, which everyone does is underpricing to gain traction, very wrong thing to do. Ignoring the hidden costs like the churn rates, the returns which you are providing, and scaling before proving unit economics. As I said, that unit economics is extremely important. If you're not profitable at a unit level, don't ever think of scaling your business, because you will end up losing more money, your own money plus investors' money, and it's not going to go anywhere. First, ensure that you become stable at the unit level, at a per unit level, operationally profit, and then move ahead and become, what I will say, increase or scale your business over a period of time. Understanding finance, I think this is where I've just tried explaining a lot of concepts, so it's more like a monologue, but this is where the interesting part is. Understanding finances, I think, is very, very crucial for all of you. We'll now delve into the P&L, balance sheet, cash flow, plus how to make a revenue model, which is extremely important for all of you. I think these are the things which kind of disturbs all the startups, which includes jargon overload, whether I should raise debt or equity, why finances matters. There is a lot of fear of numbers among the startup. What is asset? What is liability? Should I be delegating responsibility? What will happen if I kind of just share my numbers with someone else? Do they kind of tell it to the world? What is this EBITDA, gross margin, unit economics? I think I've explained that to you. But there are a lot of questions which comes to investors' mind when we start talking about finances. And I think every promoter, woman entrepreneur, mompreneur, or any entrepreneur have to ensure that they have to have a very strong hold on finances. Definitely, I'm not asking you to sit and make your financial model if you do not have that caliber. But the whole idea is to be able to read those financials and able to ask the right question. Because if you don't ask the right question, then you're not able to answer the same thing to the investors when they are asking those questions to you. And then you, in a meeting, you can't say that, oh, my CA knows it, oh, I don't know my numbers. That doesn't go in good light with your investors, because they said, oh, isko to khud ke numbers hi nahi pata hai. So how could they be able to take or scale their business to a different level? You can't rely on your number on somebody else. Out of setting financial goals, as I said, smart goals which you have to set up, revenue milestones, you have to always consider how you can reduce your cost over a period of time. Have short term and long term goals as an agenda. When you, as a startup, also very, very important, have quarterly goals and then have a 2 year or a 3 year goal. Quarterly goal could be increase online sales by 20% within 6 months. And a long term goal could be very specific, open a second store location in 3 years at these geographies. So very, very important that you think like this as an entrepreneur. I am also an entrepreneur now. 3 years I jumped into entrepreneurship. You get very attached to the business because you feel it's your baby, you're very passionate about it, but you also have to think prudently and have goals set in place, and you have to have very specific smart goals. S stands for specific goals, M for measurable, A for achievable, R for relevant, and T for time bound. You can't say, I wanted to be India's number one company in XYZ segment and you are done. No, this is very, very, it is not time bound, it is not measurable. Whether you're able to achieve it to become number one, you don't know. So you have to have very specific measurable goals in place so that you can achieve it. Because if I will say I wanted to be number one in 2 years in this particular segment, I know that this is what I got to work on, and I'm very clear about it after that, that how I have to achieve it. Have those timelines in place. Always have a pen and paper, because that's where, when you will start writing those things in a booklet, you will understand what all things you got to do over a period of time. Financial statements. I'm sure all of you or would have been into business for 2 to 3 years, or maybe 1 year, or maybe would have just started off. Whichever stage you are in, you have to ensure that you know these three things which are very important. P&L, balance sheet, cash flow. This is the outcome of your business. Whatever you have done over a period of year, this is the outcome which is reflected in a measurable numbers after the year ends. So what is a P&L? It primarily provides insights into your company's operations and efficiency of management team. What is a balance sheet? Snapshot what company is doing, primarily the assets and liabilities, as well as the equity shareholder in the company, and cash flow. Very, very important for all of you to understand. It provides data about inflows and outflows. Lot of businesses I've seen who are positive at the PAT level, but their cash flows are bleeding and they have shut down their businesses. So you have to ensure that you manage your cash flows very, very nicely. What is a P&L? We have just discussed the P&L. P&L is revenue, and how the P&L looks like. There's a revenue, there is cost of goods sold, operating expenses, comes the EBITDA. I think everybody knows about it. EBIT and net profit. These are the various components which is there in your profit and loss account. I'm sure you will all have seen Schedule 6 or whichever format you are making your company's financial. The revenue has these, and we will also understand now how to populate this to make a financial model, because that's what investor is looking at. But I thought that it's better I'll explain what are the components before I get into what is a financial model. Balance sheet, I'm sure, as I said, equity and liability. And assets, where you will have current and non-current assets plus your cash into the balance sheet. I'm not delving more into it. I'm just trying to tell this is how your balance sheet, P&L and cash flow looks like. This is exactly how your financial model should also look like. Cash flow statement, as I say, ensure that can meets its obligation, invest in growth and build financial resiliences. You have to monitor very effectively your receivables, because a lot of times you are doing great sales, but if your receivables is primarily your debtors, जिसको आप उधारी पे सामान दे रहे हैं, अगर वो आपको within 30 days, 60 days आपको पैसा नहीं देते हैं, then there will, even though at a book level you are profit, but there will be a cash flow issues, because आपको next year उनको bad debts में डालना पड़ेगा अगर उन्होंने payment नहीं किया है. Manage your payables very well. Whatever you got to pay to your vendor, ensure that you have timelines to do that. Maintain a cash reserve. Always ensure that you have a safety net even when you are doing your business. Just don't play blind and have put everything. You should always have a cushion of 10 lakh, 20 lakhs, because there are contingencies which may come in. Assuming you want to apply for a trade license, and which is very crucial right now because there's a competitor also coming who has copied your idea, right? And if you do not have the money right now, what will happen? You will be put in a situation where you cannot apply. Your competitor applies, and then your business is done. Your business will shut down over a period of time, because the IP authorities doesn't know that it is your idea, your business, because you have never patented it. So, but you would have patented it if you have that money in place. So you always have to have that X cushion. It depends upon the size and scale of your business. Every individual may have a different size and scale. So you got to decide that, but ensure that you typically have 10 to 15 lakhs as your reserves. Assuming you are a crore of a business or a 2 crore business, always have that, or you should always have a minimum cash reserve balance with you. Revenue model and revenue projections for startup. I think this is very crucial, because that's where the entire thing, I mean, आपको revenue कहाँ से आ रहा है is very, very important for investors to understand. Revenue projections, why does it matter? It guide your strategic decision, attract investments, identify risk early, and manage resources. Key revenue assumptions to define is your market size and segment. So assuming, let's take, for example, any industry, let's take EV industry. So you have to figure out what is your TAM, what is your SAM, what is your SOM. I think I'm sure you all must be aware about these terms by now. As an entrepreneur, if you don't know them, I think you got to know them by now. So define what is your segment which you are focusing on. Extremely important. Once you identify that, assuming the EV market is $50,000 million, okay, and out of that, SOM is obtainable market for you is, let's say, only $5,000 million, of which how many competitors are there? How much could you achieve in 1 year? Because that is also contingent upon what you are manufacturing, right? I will say I have access to this, but do you have the capability to provide that much product into the market? No. So you have to identify your revenue by keeping all these assumptions in place. Pricing strategy we've already discussed. Sales volume, you should be clear कि मैं एक साल या every quarter, ensure that as a startup you do monthly analysis or monthly projections as to what you can achieve. Sales volume, assuming you are making any XYZ product in terms of, let's say, kgs, service industry, wherever you are, I can sell, let's say, unit. I can sell 15 units in month one, 30 units in month two, 25 in month three because there is a lean period, then 45. Also do quarterly analysis. You will figure out when you make such projections for yourself, you'll also figure out the trend in your industry, and you have to have a very realistic, logical revenue assumptions. I will also go into the Excel in some time. Let me just complete with the theory part right now so that we can just work on Excel. You can see how I'm doing it. But this is very important that you have to identify, because this, if you say, no, I can't identify, I don't know how many customers I have, I don't know what sales volume I will do, then I will say, I don't know how to make investments in your business. It is as simple as that. So you really got to figure out what kind of sales volume you will have. Plus, you will also have to define the acquisition and churn rate, okay? Because that will define, because every month you will acquire few customers and they will also be churning of few customers. And as I say, seasonality and trends you have to figure out, because there may be few quarters when the sales are lean, because that's where there will be few quarters when sales are pretty high. So you have to make that into consider. Take all those things into consideration when you are making a revenue model. How to project it when you're putting everything into your pitch deck, because that is very important. As an investor, मैं आपकी वो 10 स्लाइड ही देखने वाली हूँ. अगर मुझे वो 10 स्लाइड्स पसंद आए तो मैं आपसे बोलूंगी कि प्लीज XYZ send me further data, also send me a financial model so that I can review it holistically. So very important for you that when you are projecting your revenue streams into the slide, wherein you have two slides, the revenue and financial slide. I will say put two slides on finances. One is revenue slide specifically, another is all about finances. You have to have a clear clarity of revenue channel, whether you are in B2B business, whether you are in B2C business, whether it's a mix of both, then write B2B, B2C. Plus, if it's possible, also have geographical distribution of your revenue model in terms of, so B2B, I will get 30% from North India, 20% from here. If you want to be more specific, MP, Gujarat, Maharashtra, J&K, Andhra Pradesh. So you have to be very, very particular. When you provide details at that level, I know that you have done your job very well. You are very clear. You give me that clarity of thought. As an investor, I am looking at clarity of thought, whether you have mapped your revenue properly or not. Because a lot of times, when I speak and interact with entrepreneurs, they say, "Oh, I believe that the sales volume would be like that will increase by 15%." But when I dig down and ask them further, okay, so tell me whether it is from B2B or B2C. If they say B2B, then I will ask, which territories are you focusing on? And somewhere they pause, and I know that they do not have that clarity. Any entrepreneur which has clarity to the last level with respect to revenue, which is something which is very exciting for promoters, and these are the founders which, as an investor, I would love to talk and interact more, because I know they have done their job well. They know exactly what they have gotten into, and they will give me the right ultimately my target is to exit from the company, so they will give me the right exit. After this, I will also tell you that preferable if you can divide your target customers into age demographic. If it is the scene, assuming you are coming up with a bike, or you're coming up with something which is targeting, let's say, or you are a med tech company, or some company which is targeting someone in the age group of 20 to 35. So you should know your target segment pretty well. You can't say, oh, my product, unless your product is actually being okay for everybody to use it. Have that target age demographic in mind, gender focus, male or female, whether your product is for male, female, or it is for both, or which target segment, income bracket. What should be the income bracket you should be targeting at? 20 lakh, 30 lakh, 10 lakh, 5 lakh. Is it for people below the poverty line, above the poverty line? How it is? Geographic market. Are you focusing on tier 1, tier 2 cities, or are you focusing on the hinterlands of India? Very, very important. This also becomes your go-to market strategy. Once you put this under the revenue stream, your go-to market strategy, which people say, also becomes very, very clear. And you know now how to project everything in a financial Excel model. Popular revenue model which are there, you should actually know your revenue model. One is B2B, B2C. Those are channels, I will say. Whether it is an advertising revenue model, which FB, Insta, Google uses. Subscription model. Is it a transaction revenue model? It's a SaaS licensing revenue model. affiliate revenue model, commission marketplace, retail, which is just like a mom and pop shop. It's a crowdfunding platform, freemium model, or you're just selling a product. Which model are you getting into, right? So have that under B2B, B2C also. If there's a particular model which you're having, please ensure that you are putting it on a slide. Ensure that you're putting it very briefly on a slide, because too much content on a slide also clutters the slide. So just bullet points, ensure what you are doing, and it gives a clear picture to an investor. How to make revenue projection, I've just detailed, I've discussed that. Gather historical data, conduct market research. So you should know your TAM, SOM, everything, whosoever is your target market. Define your revenue stream, estimate sales volume, calculate revenue, which is simple. What is revenue? Revenue is, अगर आप बोल रहे हो मैं 10 यूनिट बेच पाऊंगा, मेरी प्राइस 300 रुपए की है, और so typically it is 3,000 rupees per month is what I'm earning. Next month I will say I will grow my business by 10%. These are the numbers. So next month it will become 3,300. So you have to have all those things in place when you kind of doing your revenue model. Be conservative. I think don't go overboard. I feel like there are promoters or entrepreneurs who say, oh, this year I will be 1 crore. So year 0, 1 crore. Year 3, 1,000 crores. And I don't know how will they achieve it. When I ask that question, they don't have an answer. Make a very realistic model. I am not saying using maybe you can make a conservative model. It is good. But ensure that you make a realistic model rather than idealistic model. Because I know 1 से 1,000 crores possibly नहीं होगा आपको. आप कुछ भी कर लीजिए. Validate with real feedback. Ensure करिए that you're validating your model with few people who are already in the industry or industry expert. Whether am I missing onto something? Use multiple data source to vouch for that model, because it is ultimately an assumptions which we are making, right? So you may be making an assumption on the market, but assuming you think market size is 35,000 crores, but as per the reports, the markets are only 10,000 crores. So your entire assumption is shrinking. See, if the market size is more, it's fine. But if it is low, it's not correct. So make your basis reports like a PwC report, KPMG report, McKinsey report, have data sources for whatever you're doing and document everything. As I said, documenting everything is one of the best things as a promoter you can do, because you exactly know where you are heading towards. Have certain goals. मुझे ऐसा करना है, मुझे ये करना है. After 3 months, I want to do this. I'm sure you must all be doing it. But when you write, if it's in your head, it's fine. But when you put it on a piece of paper, you are revising it. It's like you're going to school, revising it so every time you read it, oh, I wrote this, oh, I have to achieve this. Financial model, I think this is why we are all here for startups, very important and crucial. Again, we have discussed the revenue projection part of it. We have discussed it entirely. What we will discuss is the cost structure part now, which in turn, once you have your revenue and cost in place, your profitability will be defined. Plus, you will also know that if I have to grow at such a pace, what kind of money do I need to ensure that I reach that particular level? So that will give out a number of what funding do you require. And key assumptions, as I say, assumptions for revenue is the key assumptions which you are making. Plus, you will also have to make assumptions for your HR, because how many employees you will be hiring to ensure that if you want to go from 1 to 50 crores, how many number of people do you need? So those assumptions needs to be written, provided for, and on the basis of which the model populate itself. Key assumptions, as I said, we have spoken about customers, we have spoken about revenue. Cost dynamics is something which we will dealt with now in this particular section. Cost structure. So what kind of cost do we have? We have already so cost of goods sold primarily includes your direct cost, which includes your raw material cost, your production cost, your labor cost, and your manufacturing overhead. So typically, if there is a historical statements with you of your own company, and you know that the cost of material for me is 15% of the revenue, so you have to calculate it as a percentage of revenue, then typically it remains the same unless the raw material price is increasing. So I have to make that assumption that next 4 years the prices are not increasing, because there needs to be certain assumptions. Otherwise, the model may go haywire. The price of the raw material remains the same, and of course, you have to change your model. Maybe after 10 months, you got to know that the prices have increased. You can't say, oh, I made a model, I don't want to change it. You got to change it. But when at a point in time you are making a model, you have to make certain assumptions. So you will say that my price for raw material is 25% or 15% of the cost, and it continues to remain so for the next 3 years. So assuming my revenue is 100, so my price will become 50. My revenue is 200 in next month. So my cost of raw material will be 15% of the same. So it becomes 30 rupees, because these are variable expenses and they are pro rata to the revenue I'm doing. Fixed expense to any which ways will be a flat, because whatever you are paying for a fixed asset like a warehouse or a factory, you have to pay X amount, you have to pay X amount per month. Whether you are doing 100 crore of revenue or 200 crore of revenue or 5,000 crore of revenue, assuming that that particular building has a capacity to give you 5,000 crore of revenue. Operating expense is very important, which is like a payroll, which the staff which you have, the marketing campaigns, office rent. This is different from the rent of the warehouse. A lot of times people get confused. Warehouse rent or a rent for a manufacturing unit is a direct expense. Indirect expense is the office rent. Office is a place where you are sitting as an entrepreneur. There may be a situation where both are clubbed. If you are not in a manufacturing industry, if you're in a service industry, then you can decide whether it will go as a direct expense or an indirect expense, or pro rata to both the places, and that's leave it to your utilities, administrative overheads. Those are indirect expense, and you will also have to consider capex. So if you have to grow from 1 crore or a 10 crore to 100 crore over a period of next 3 years, what are the additional capex expenditure do you need, right? You have to have that in place. I'm not talking about the amount which you need to hire employees. I'm talking about the capital expenditure. Maybe you want to buy a server, or maybe you if you want to increase your production capabilities, or you want to add more laptops into your system. So ensure that what kind of capex you want to kind of incur, and you will then bifurcate that. So डायरेक्ट एक्सपेंसेस जो होंगे वो डायरेक्टली एक परसेंटेज होंगे हमारे रेवेन्यू का. जो इनडायरेक्ट एक्सपेंसेस हैं जो कि फिक्स्ड है वो तो सेम ही रहने वाले हैं अनलेस प्राइसेस इंक्रीज हो रहे हैं उनके. So they will remain the same, and that's why it is being said, as the company grows over a period of the time, the economies of scale set in and profitability increase हो जाती है. Because revenue फिक्स्ड एक्सपेंस तो सेम ही रहते हैं हमारे, लेकिन जैसे जैसे रेवेन्यू हमारा टॉप लाइन पे बढ़ता जाता है और फिक्स्ड एक्सपेंसेस सेम रहते हैं, हमारे ग्रोस मार्जिन बढ़ते जाते हैं. जो ग्रोस मार्जिन आज 50% है, कल वही ग्रोस मार्जिन, बिकॉज फिक्स्ड एक्सपेंसेस सेम है हमारे, इट इंक्रीजेस ओवर अ पीरियड ऑफ टाइम टू मे बी 60% और 65% बेस्ड अपॉन द बिजनेस यू आर इन. पर्सनल प्लानिंग, एज आई सेड, यू हैव टू हैव अ हेड काउंट फोरकास्टिंग कि मुझे अभी आगे बढ़ने के लिए फ्रॉम 10 to 100 करोड़ इफ आई टू गो, डू आई नीड टू हायर अ सीएफओ, डू आई नीड टू हायर अ सीडीओ, व्हाट आई शुड बी डूइंग, उनका कंपनसेशन क्या होना चाहिए, उनको उसका बजट एलोकेशन करना पड़ेगा. ramp up modeling, what all things do I need, and you have to have burn rate also. Like for the initial 10 months I will burn, and I need 1 crore rupees every month which is burning. So every month 1 crore for another 10 months if I'm burning, because I believe from 11th month I will have profitability in place. So you will say, Prachi, I want to just take 10 crores. I will say no, because raising funds is a very strenuous and very meticulous exercise. If you think you need 10 crores, always have a 30% contingency on it. Raise maybe around 13 to 14 crores rather than 10 crores. And of course, you have to define yourself. So that's why I said if you have realistic number in place, that's the point in time you can define the exact amount which you want to raise. Cash flow, as I say, I just spoke about the runway, like 1 to 10 months. If I'm thinking 10 for 10 months, I will bleed. 1 crore is an expense for me 1 month per month. Then 10 crores is the minimum what I need. So don't go by the minimum amount which you want to raise. Go by something more which you need to raise the funds, right? Add to that the capex which you are incurring and all other things. And always, as I say, extend your runway. You can also have an ideology to extend your runway. So extending runway is a very nice concept which a lot of finance professional use, which typically means that if you think that every year आप 1 crore expend कर रहे हैं, is there a possibility कि आप वो 1 crore को reduce कर सकते हैं कहीं से? There is only two way of reducing it. One is you increase the revenue, which is the simplest way to do it. The other way is, can I optimize my cost? Can I reduce my cost? If I can do that, that is also an equally important way to bringing that 1 crore figure to an 80 lakh. I'm saving 20 lakhs per month, 20 lakhs into 10. 2 crore is what I saved. So I've increased my runway by 2 months. That's a great way. So you have to be very, very focused in terms of finances also when you're doing your business, because it will decide whether you will sustain over a longer period of time or not. Scenario planning, always have best and worst case scenario planning in place, or what we also call as sensitivity planning. So you think that the revenue is 100, 200, 300, 400, but there is a possibility that the markets are bad and next year, instead of 200, your revenue is 100. There is a stagnant growth. So have worst case and best case scenario in place, and somewhere in between is what you want to be asking during the fundraising that this is what you need, and you have taken into consideration both scenarios. Why a solid financial model? As I've been constantly telling, that it builds investor confidence, strategic agility, and it's a growth engine. It tells me as an investor that you know company pretty well, and I am sure that you will give me returns over a period of time. हाउ डू आई नीड टू रिप्रेजेंट इट इज अ क्वेश्चन विच लॉट ऑफ पीपल आस्क मी, बिकॉज वो क्लटर हो जाता है 2 स्लाइड. अगर मैम हमको 10 ही स्लाइड चाहिए, 10 स्लाइड में हम कैसे रिप्रेजेंट करेंगे? आई टेल यू हाउ यू हैव टू रिप्रेजेंट इट. दिस इज द रेवेन्यू स्ट्रीम इलस्ट्रेशन स्लाइड. This is how you can just put your product or service, B2B, B2C, percentage revenue on from each stream, and geography wise bifurcation. Target customers also you can define. Extremely important. As I said, gives me a clarity, clear picture कि आपका revenue streams क्या है. In terms of financial projections, okay, I will have to have a bar graph or something pictorial so that it is easy for people to understand. I should have to write my unit economics, CAC, LTV, gross margin, fundraise. I think these are the numbers which, as an investor, I'm looking at. If everything is there on one slide, I have financial projections. It's easy for me to figure out, oh, what I'm doing is okay. I know I have an analysis of this particular company, and I know, okay, this is something which I want to talk more to the promoters. I'll give you a call and I'll say, hey, can we set up a call and discuss more about your company? Then comes the financial projection. This is exactly how the model, ultimately your P&L will look like after you make a lot of revenue assumptions. I will be taking or walking you through the assumption slide, the entire Excel sheet also. Once I complete this, I'll take a pause, take few questions, and then maybe go ahead with the Excel model, which I have with me. And let's build this together. As I say, we will build this together if possible, if time permits, after I take a Q&A. Thank you so much. I stopped sharing. I've spoken a lot. It's like a monologue for me. But yes, Vatsala, if you can tell me questions. I know I've been pretty fast. I was trying to explain the concepts as much as possible. I don't know how much these people were able to understand, but I wanted to cover all these things and maybe could take another session on one particular topic as well.
No, I'm sure my audience is grasping all these topics quickly. So we have a few questions. How can startups balance profitability versus growth, especially in capital-intensive sectors?
So I think it's a great question in terms of balance profitability versus growth. So I think at the initial stage of your business, somewhere when you know that, so I'll give you an example. Like when you're starting your business, if you're a startup or maybe 2 years into it, initial stage you focus more on growth, I will say, because profitability will built in. Okay. But having said that, you should not have a growth plan. As I said, मेरा आज 1 crore का है, Prachi, in 4 years, I will have 1,000 crores of growth. No, that is not a growth for me. The idealist growth would be, today I am at 1 crore, and after 3 years, I want to be 50 crores. So definitely you can define what kind of money do you need to grow from 1 to 50 crores, right? And initially, we all understand that VC industry is all about that the startups are not able to manage their funds pretty well because they do not have any funds. They are putting in their funds through limited resources, right? So they are going out into the market and raising funds from investors. So they do understand that at the initial period, you may not be having profit. But I will say, if you have a path to profitability, plus growth is what company investors expect you to do, because you are not, see, it's not a private equity investment. If it would have been a private equity investment, I would have told you that you have to manage growth and profitability both. There is no shortcuts to that. But because it's a VC investment and VC is more like an angel fund or a startup funding, right? There I will not say that you have to choose profitability over growth, because if you do that, then you will stuck up at a level because you're only focusing on the profit numbers, which you should not be doing as of now. Because if you have a good business, there will be multiple people who would like to invest in your business as an equity holder. You have to dilute your equity shareholding, take money from them, grow your business, because this is the time you have to grow your business, because your idea will stale after 5 years and then you will say, oh Prachi, I was focusing on growth. So right now focus on little more on the growth at the stage of your life. Plus, also ensure, as I say, have path to profitability. You can't say, Prachi, I will not be earning any profit since till 10 years. No, then I'm not interested in your company.
So the next question is, at what stage should a startup start preparing detailed financial models?
So as I said that again, I will say a very interesting question. There is no stage. In fact, you should have the financial. See, financial model, a lot of times people think it is for an investor. Okay. I have a very different perspective to it. It is not for an investor. It is for me to know where I want to take my business to. So I think once you have your things ready in terms of if you are at a prototype stage, I'm not telling to build a model at that point in time because तभी तो आप आपका product ही fit करने की कोशिश कर रहे हो, right? But once you have a product market fit, once you have crossed that age stage of prototype, I feel that's where you should have that entire big financial model in place. But having said that, you should at least know at least the revenue numbers and the cost numbers you should know. कि ये मोटा मोटा नंबर्स है, अगर मेरा ये प्रोटोटाइप इस पे हो गया और ये मेरे एक्सपेंसेस लगेंगे और ये मेरे फंडिंग सोर्स है. यू शुड हैव अ ब्रॉडर आइडिया. Don't get into building a big, like a big holistic 10 pager, 20 pager Excel model, but have those smaller things in place so that gives you a pathway what you got to do.
Um, I want to ask that if there is more than one categories of products and their prices vary from each other, so how will the unit economics will justify in one because average doesn't work as
So
well?
absolutely, great question. You may have two different products. One is a high value product, one is a low value product, right? And you are talking about it was CAC or LTV. What did it said, Vatsila?
Just a second. So, unit economics.
Unit economics. So what you can do is, as I said, that you have to unit economics is any which ways for a per unit, right? So you will have a revenue number for unit, assuming you are selling one product at 100 and you are selling another product at 10,000 rupees, right? फॉर बिकॉज 100 का आपको कॉस्टिंग पता है, 100 का प्रोडक्ट का कॉस्ट क्या है पर यूनिट का. सो यू विल से द कॉस्ट ऑफ दैट 100 रुपीज का प्रोडक्ट इज लेट्स से 40 रुपीज, राइट? And to sell that 40 rupees on digital marketing platform, online platform, or print media platform, Prachi, I'm spending 20 rupees. So for your product one, 100 minus 40 minus 20, your unit economics per unit is 40 per unit. For another product, which is assuming a high value product, which is 10,000 rupees, your cost of doing it is 3,000. I mean, the cost of raw material and other expenses, labor is 3,000. You are spending, let's say, 3,000 more for selling this particular item because it's a high value item. So 10,000 minus 3,000 minus 3,000. So technically 6,000. So 4,000 is my product 2 का per unit मतलब per unit profitability which I am happening at operational level. So you have to any which ways, please understand, for a unit economics I am not taking indirect expenses into consideration. I'm only taking direct expenses into consideration and fixed cost. Now you may only ask me कि प्राची how to bifurcate the fixed cost, क्योंकि fixed cost तो हम लोग ले रहे हैं unit economics में जो मुझे आपने पढ़ा है. तो fixed cost का you have to do the allocation, assuming that for doing making product one, assuming it's a factory, you are allocating 30% of the place, and for doing product two you are allocating 70% of the place. And if your rent is 1 lakh rupees, okay, so 30,000 rent is attributable to P1, which is product one. 7,000 is at 70,000 is attributable to product, which is P2. But this is for the entire month divided by the number of units you are producing in that month will give you, assuming you are producing 100 units of 30,000 का, तो ये आ जाएगा आपका 30 rupees. So you minus 30 more from 40, you will get 10 per unit, which is your actual unit economics or profitability. अदर में 70,000 का मान लो आप प्रोड्यूस कर रहे हो 10 प्रोडक्ट, तो 70,000 में से sorry, you are producing, let's say, whatever 30 products or more, you divide it minus 3,000, then your unit economics for the P2 is 1,000 per unit. Hope I've answered that question in detail. I mean, I would have done it on a calculation, but it's just the calculation I'm trying to explain because there's a lot of numbers in place.
Yes. Okay. Next question is we are at pre-revenue stage and our product will take approximately 1.5 years to come into market. So for that, how can we plan our financial model?
Okay. So as I said that because you are at a pre-revenue stage, again, as I said that the financial model is primarily for your personal clarity. It is not for investors. It's just that the word financial model has been used extensively by investors. I will say for you, it will be financial budgeting or financial forecasting. But ultimately, outcome of financial modeling, financial forecasting, financial budgeting is more or less the same. Budgeting, you may be doing it for 2 years. Modeling, you're doing for investor for 5 years in a particular manner which they want. So I will tell that you have to identify, as I say, you have to identify your industry, you have to identify your market, what is the market you want to capture, have that thing in place and see whether you are able to achieve that after 1.5 or 2 years or not. At least have broader numbers in place.
Okay. Next question is, what financial indicators help founders decide when to scale and how should they plan their finances while navigating uncertain or volatile market conditions?
I think it's a very interesting question. I will say what financial indicators help founder decide. I think there's nothing, a lot of times it's the gut feeling because when things are uncertain, volatile, and the COVID happened, right? Nobody knew what will they do.
Yeah.
Suddenly, I think great companies came during the COVID time because work from home started. People are online classes have started. I think the edtech industry got a boom during that time. Nobody knew, so you have to figure out based upon your product how could you utilize that particular situation to your benefit. If it you are in an industry where you couldn't utilize it to your benefit, then I think I mean, of course, I need to figure out which industry you are in, what you are doing. But having said that, there is no way. Sometimes it's also the gut feeling because you know your business well. There are times when you know that ये business अब नहीं चलेगा, but unfortunately हम है ना वो pause नहीं ले पाते because हमको लगता है no, this is our baby, this is our product. I feel, Vatsala, for an entrepreneur also, sometimes they have to accept this is not going to work.
Mm.
Closures are very important in life. Closures and clarity. Once you have reached that stage, close it because this is not an end. There may be a possibility you have a better idea, but you're stuck up there. I think it's more of an
Yeah. Yeah.
a different emotional or mental gyan which I'm giving you. But I think this is psychological gyan, I would say, but it is very important. Where you feel that you're stuck up, I think closures are important. Just don't invest too much because then it will drain you personally also.
Very true. Next question is, how can tech-based startups do their calculations when it's completely service-based or digital products to sell? People are selling products from their living rooms. There is not much to space of expenditure. What kind of financial model should it have?
So the financial model remains the same sort. It is not going to change just because your business formats are changing. The only change would be that if you're doing it from a living room, so let's say rental would be zero. Unless you say, oh, I will charge this particular area जहाँ पे मैं बैठी हूँ, which is 30 square feet, उसका मैं पूरे घर का रेंटल अगर मैं लगाऊं 200 रुपए के हिसाब से तो इसका 6,000 रुपया लगेगा, फिर दिन का इतना लगेगा. सी अनलेस आई डू दैट कैलकुलेशन, ठीक है, मतलब आई व्हाट आई एम ट्राइंग टू टेल इज कि यू कैन डू इवन दैट कैलकुलेशन ऑल्सो दैट 30 का मैं महीने का 6,000 रुपया मुझे ब्लॉक करना चाहिए. एंड यू कैन टेक ऑल्सो फ्रॉम द कंपनी, यू कैन टेक इट आउट फ्रॉम द कंपनी कि दिस इज द स्पेस आई एम यूटिलाइजिंग. एज यू ग्रो एंड व्हेन यू हैव इन्वेस्टर्स इन प्लेस, nobody wants you to do business from a living room. It's good to start with, but it is not an end. I mean, even you would not like to do business from the living room. I think COVID may we all did from the living room, from the bedrooms, from wherever place we got. But having said that, people wanted to go out and do their business. Of course, smaller businesses हैं. आप start तो सब ऐसे ही start करते हैं ना. But कहीं ना कहीं will be there. So always have broader perspective and futuristic growth in mind when you are building something. You can't say कि आज कल आप वैसे नहीं करने वाले हो. Tomorrow you're going to change for a while, right?
True.
So model remains the same. उसमें कुछ change नहीं होने वाला just because you're doing it from a room or tech or product or service or tech हो कुछ भी हो, model remains the same. It's product or service.
Okay. Another question, in today's market, how should founders navigate valuation expectations to avoid overvaluation at early stages, which later leads to down rounds or cap table stress?
So I thought this promoter is going to ask me about the overvaluation. I mean the undervaluation because that's what promoters are very worried about.
Yeah.
Because so I will answer that question, but first let me talk about on the undervaluation part.
Okay.
Because please understand that an early stage of your business, if you are undervaluing your business, assuming you believe that your business is 100 crore rupees, and of course it's not the belief, it's also the numbers what they're speaking. But you are in a desperate need of money, which you are at a startup stage, right? कोई हमारा माई बाप नहीं है. We have to go out either to the bankers are not going to give me that much kind of money, so I have to reach out to angel investors. When I do that, okay, so instead of 100 crores, I am just settling at 50 crore rupees. valuation. So I'm undervaluing my company. Okay. When I do that, what is the effect? 100 करोड़ में अगर मैं 10 करोड़ के लिए 10% दे रही थी, तो आज मैं 100 करोड़ में का वैल्यूएशन तो नहीं है, 50 करोड़ का वैल्यूएशन हो गया क्योंकि मैंने अंडर वैल्यू कर दी खुद की कंपनी, तो मैं उसको 20% स्टेक दे रही हूँ. As on today, when you are small, you will not understand the difference between 10 and 20%. But tomorrow, if you become a unicorn or a sunicorn or slightly bigger company, then that 10 additional percent which you have given for undervaluation will hit you hard. Because I always tell my companies, please do not dilute in desperation. There are so many, go to bankers, go to friend, beg, borrow, not steal, beg, borrow, family के पास जाओ, go to places where you can get grants for your business provided you have value proposition, so that you have a non-dilutive capital. Once you have a non-dilutive capital, you are also protecting your equity. But there are times when a lot of startups have to say yes for undervaluation. Okay. Now coming to overvaluation. As far as investors are concerned, I have been on this side, Vatsala, for 17 years of my life. I will never overvalue the company. I will always ensure कि वो 100 बोल रहा है तो मैं उसका डील 50 पे करूँ. Then somewhere it's like, sorry, a lot of time I say that negotiation is an art. Ultimately, it is like a very beautiful art. I don't know if anyone of you have seen, I give this example every time. When your mother or your father goes out and buy a tomato, वो भाजी वाला बोलता है 20 रुपए का, फिर आप बोलते हो 15 रुपए का, फिर कहीं पे आप सेटल हो जाते हो 18 रुपए के. 20 की प्राइसिंग है वो आपको पता है, लेकिन कभी भी कोई 20 पे नहीं लेता उसको, तो वो इट्स एन आर्ट. बोर कौन अच्छा बार्गेनिंग पोजीशन में, अगर आपकी कंपनी रियली ग्रेट है और आप बहुत अच्छा कर सकते हैं, एंड दैट इज द फ्यूचर. लेट्स से ओपन एआई में जब एआई आया था, उसके इन्वेस्टर को, एवरीबडी नोज दैट उसको कितने सारे लोगों ने रिजेक्ट किया था, राइट? तो अगर उस समय कोई उसको पहचान पाता कि कंपनी अच्छी, और वो जो वैल्यूएशन मांग रही थी, अगर वो वैल्यूएशन उसको मिल जाता, राइट, तो वो इन्वेस्टर को दे देती उसका वॉट एवर पर्टिकुलर स्टेक, एंड शी वुड हैव बीन हैप्पी कि नो वी हैव रेज्ड मनी. बट आई एम टेलिंग कि एज एन इन्वेस्टर उसको शायद 100 चाहिए था, इन्वेस्टर 50 बोल रहा होगा. And that's where she never raised outside funding. I am, of course, later point in time she raised, but then the initial days. So overvaluation बहुत कम होता है वत्सला, लेकिन in a scenario जहाँ हो जाए, I will put it other way. It is not overvaluation. The company may be valued typically between those numbers, but company is not able to meet its projection over a period of time. So वो जो मैं 1 और 1000 करोड़ की बात करते ना, आपने मॉडल तो 1000 करोड़ पे बना दिया, वैल्यूएशन पे 1000 करोड़ पे दे दिया आपने, राइट? सो यू हैव नॉट डन योर वर्क वेल एट द इनिशियल स्टेज. फिर जब सेकेंड राउंड हुआ तो आपने तो वो परफॉर्म ही नहीं किया ना, परफॉर्म नहीं करा तो वैल्यूएशन कम हो जाएगी, वैल्यूएशन कम होगी तो वो डाउन राउंड होगा, डाउन राउंड होगा तो इट विल अफेक्ट योर कैपिटल, बिकॉज इन्वेस्टर्स भी राइट लेके बैठे होंगे ना कि डाउन राउंड होगा तो हमारी इक्विटी इंक्रीज हो जाएगी, राइट? देयर इज अ रैचेट व्हिच दे आर यूजिंग, राइट? सो इट इज नेवर कि डाउन राउंड हुआ है, क्योंकि इन्वेस्टर, एज फार एज आई नो, I was also on the other side. They're the most smartest breed in terms of giving you money, because they're giving you money. Na? Yeah, matlab, I am telling, I'm also an entrepreneur today. And I know when I deal with investors, they don't want to give anything extra to you, right? They just want to curtail everything, whichever is possible. So I think there is, so this is the process which it typically follows. It's never an overvaluation. It's like you're not able to meet your projected numbers. I pause here. It's a period. If you're not able to do it, the down round automatically happens. There is no overvaluation.
Yes. Okay, so thank you for answering our question. So we can have the Excel explanation.
Yes, I will just do that. Give me a minute. So can everyone can see this? Yes?
Yes.
Yeah. So we were speaking about revenue. So let's come to the assumption sheet. Okay. So this is how your model should look like. And if you want, I can share this sheet also with you, Vatsila. You can share this ahead. And of course, this needs to be changed or customized for each individual business pattern, right? I've just made it for a manufacturing unit. Okay. So industry numbers. So as I say, direct expenses. So manufacturing cost percentage of sale hona chahiye. So assuming you already were in business, right? So assuming this is your 25, this is 25, and this is your 1 lakh. Right? On the basis of this percentages, you will define in 20 year one, whatever, 1 minute. I'll just copy this here as well. And then you will say, okay, so this continue to remain the same. So 25% of revenue is my manufacturing cost. If I do that, so what is the outcome? Maybe I will say this has become 30% over a period of time. My rent has increased by 10%. So this is how your model assumption sheet will look like. So for every branding marketing, there is something which you have incurred over a period of time. So there is a history which you have. If you're a new startup, then you have to start from year one itself. You have to start making the assumptions based on the product what you are doing. But अगर आपका एक साल हो गया है already in place, you have to put those numbers at this level and figure out what is your percentage of manufacturing cost as a sale, direct labor as a percentage of sale, your factory expenses, which is a fixed expense. Then you have to figure out your marketing, digital expenses, traditional expenses. And then you have all these lined up. You may have certain things maybe zero because you do not have them. And certain things may be there which you can put in. Now coming on to the revenue and sales assumption, which is very important. Assuming you had a revenue of 10 and product to 25 and 4. In year 4, so this is all linked sheet. It increased to 30, this increased to 20, this increased to 50, this increased to 10. So this is your increase. So you know that product 1 is increasing by 200% from year 1 to year 2. And you feel that this increase will going to continue over a period of time. See, this is what I'm showing you here. 200%. But you will say that after the third year, Prachi, it may taper down and it may become maybe 50% of what it is doing now. So what we will do, we will just change this in year 3. And this is all assumption. As I said, you have to make assumptions. This assumptions are, of course, backed by which geography, what product, what are you doing. So 50, then you will say it will continue to 50, but in year 5, it will again taper down to only 25%. So what are these percent? These are year on year growth. From year 1 to year 2, how much the product is growing. Similarly, I will apply the same ratio for product 2 I have applied. So my product which is growing at 20 will become 24, which again is growing by only 10% year on year. It is a product which I have to be there, but it's not growing at a fast pace. Product 3 is growing at 40, 40, then it is growing at 20, 20. And product 4 again is growing at 150%. Then it is tapering down to 50, 50, 25, 10, 10. Because when you are in the initial part of the industry, when you're starting, your base is narrow. So you are growing at a faster pace, which means 1 करोड़ को 2 या 3 करोड़ होने में टाइम नहीं लगता, लेकिन 30 को 30 करोड़ होने में 3 crores to become 30 crores, it takes a lot of time. And 30 to 60, you can't suddenly pick from 30 reach 60. So आपका growth अगर 30 to 60 है, you can't say your growth is 50%. It has reduced somewhere. So the point in place is मेरा ईयर 23-24 में 29 करोड़ था, फिर 91 करोड़ हुआ, और FY1 onwards what I'm projecting is my business to be around 110 crore. Then I will grow at 140 crore, then 195, 228 and 267. So typically what I'm trying to tell is this is how you will do your revenue model or projections. Again, you will ask me, Prachi, product 1, product 2 का कैसे करेंगे अपन. Now we will come further. We will say product 1 का geographical reach कितना है. These are my geographies. So I have to figure out, okay, what are the numbers I'm selling. So I have to write 25, 23, whatever. With this, the model will get auto-populated itself. Of course, you have to link it based upon the changes which you are making in the model. As I said, with geographical spread in terms of percentage, what you have, product-wise, what is the sales quantity which you are doing it, what is the sales breakdown, and what is the average transaction value. Once you have an ATV, you know you have to just multiply. It is simple. Revenue क्या होता है? Number of units I have sold into the price, right? It is nothing more than that. बट वो इतनी सिंपल चीज है, लेकिन उसके पीछे कुछ तो वी हैव टू फिगर आउट. सो प्राइसिंग करनी पड़ेगी, कितना वॉल्यूम सेल होगा. वो वॉल्यूम सेल करने के लिए मुझे मार्केट पता होना चाहिए, मार्केट के लिए मुझे ज्योग्राफीज पता होना चाहिए, और वो आपके बिजनेस का आपको पता होगा, मेरे को नहीं पता होगा. But this is primarily the model. This is the feeder I am giving you. You have to think in this line. You start putting in the details and it will auto-populate. But if you make changes in the model, it will not auto-populate also. Then come the P&L, because assumption sheet mein we have done all expense related assumptions कि what it will be, right? Then we come to the profit and loss. Profit and loss में क्या होता है मेरा? Revenue होता है which has come in, expense होता है. Once I have my revenue and expenses placed, I will know my gross margins. Then come my indirect expenses which we have spoken about. एम्प्लॉयज हो गई, स्टाफ की सैलरी हो गई, सर्वर कॉस्टिंग हो गई, मार्केटिंग हो गई, मैन पावर कॉस्ट हो गई, और मेरे CFO, CEO, CTO का कॉस्ट हो गया. Once I put in there, I will have my EBITDA, EBIT, PAT margins in place. I just have to put in the numbers based on the assumption sheet. तो मुझे पहले साल का तो assumption करना पड़ेगा. I will not say कि I don't have any history. There may be a lot of startups which do not have history, and they may say we do not have history. If you do not have history, someone said कि मेरे को 1.5 साल के बाद प्रोडक्ट आएगा, पर मॉडल तो आज बनाना पड़ेगा ना, सोचना तो पड़ेगा कि मेरा कितना आगे आएगा, मैं कौन सा मार्केट पहुंचना चाहते हो. तो दीज आर द थिंग्स व्हिच यू हैव टू डू. Then comes the balance sheet. Again, balance sheet mein, if you do not have anything in place, there will be certain equity which you have invested. You would have taken some grant from somewhere. You would have taken some loan from a bank to do the business. So you have to put all these things. And of course, I'm not telling you to do all this yourself. I'm sure few of you or many of you are grossly incapable to do this. But if you are asking someone to do it, he will also come and sit with you and ask you कि मुझे आप रेवेन्यू पूरा बता दो, आप मुझे एक्सपेंसेस के परसेंटेजेस पूरे बता दो. उसके बाद मैं ऐसा आपको एक शीट बना के दे दूंगा. वो भी ऐसे ही शीट आपको बना के देंगे, लेकिन he or she will sit with you to get this done. Then cash flow statement, as I said, extremely important. Again, this will, once you will have your balance sheet and P&L completed, this will automatically come in. There is no rocket science in that. Similarly, your working capital also will automatically come in. Depreciation schedule, if you have any assets in place, right, then this sheet become relevant. अगर आपके पास asset base नहीं है, if it's only laptops and all, थोड़े बहुत जो 30, of course you will put in there as per the accounting requirement, but it will not make a big difference unless you will say, Prachi, I've taken a 30 crore ka land on which I'm setting up a manufacturing unit. That a huge asset which you have. So you'll have to put in the details. If you have any loan breakdown, you have to put in all those loans ka breakdown also है कि कितने amount का loan है, क्या interest हम लोग pay कर रहे हैं. This is important because for any bank or for any scheme, you should know whether you're able to make payment of the interest or not. Because if you're not able to do it, आपका CIBIL rating down हो जाता है. Because then it implies that you are defaulting on making the payment. So extremely important. This is again the valuation sheet. I'm sure once you do all these sheet, the valuation you will get the valuation of your company. This is what I will say, that of course you have to make certain assumptions in the valuation sheet itself, but then you will get the valuation of the company. I am rushing Vatsala because I think we are already out of time. Otherwise, I would have asked everyone to open up the Excel, start putting in their numbers for themselves, because this is the model for them, not for me, because everyone's business is different. कोई service में कोई product है, कोई only एक product बना, जैसे EV का I know, कोई people like Akshay, they are doing fertilizer business already into for quite some time, 3-4 years,
Yes.
2.5-3 crore का turnover है. So every business का things will change, but this is exactly how this looks like. So at the end of the day, आप किसी CA या किसी investment banker को भी दोगे तो वो आपको कुछ ऐसा ही बना के देगा. बट वो इन सबको बनाने के लिए क्वेश्चन आपको ही पूछेगा. तो हैव दोस आंसर्स रेडी इज द इंटेंशन टुडे, एंड नॉट फॉर यू ऑल टू बिल्ड दिस मॉडल, बिकॉज यू कांट बिल्ड दिस unless you are from a finance background, unless you are a commerce graduate. You can't build such extensive model. You can have just a simple Excel model, ye revenue, ye expense. But Vatsala, having said this, people may try to build their own model if they wish to, because I'm giving this sheet, they can make the changes and try building their model if they wish to. So I pause here, nothing more to say. I hope the people like the session. I think I'm just trying to cover up as many
Certainly.
things as possible.
Anyone has any questions, you can please raise your hand. I'll unmute you. I just gave like 2 minutes for this.
Sure.
Any questions, anyone? We will share this Excel sheet, and after that, if anyone has any questions or we fetch a group of people who want to take more information, I will certainly take Prachi's time for you all. Okay, so I don't think they have question.
Yeah,
Maybe
because
they
I have
can.
rushed through that, Vatsala, but we're just running short of time. It's like for everything, I take like 4 hours to get that entire sheet
I
completed.
know.
I've done it in like 12 minutes, 12, 13 minutes.
No, but I'm sure with this, they all have understood that at least these are the concepts that they need to understand well. So something they must have understood today, and they'll get back and read more about it.
Sure.
So, so thank you so much for this insightful and highly practical session for everyone. I'm sure they must have got some clarity and actionable guidance. So this is going to certainly help our founders strengthen their financial capabilities and make more confident decisions as they grow. So, thank you, everyone. Thank you to those people also who are watching us through our YouTube channel. So, until next time, keep learning, keep growing, keep innovating. Thank you so much, and we'll be back soon again with yet another interesting topic. Thank you so much, Prachi, for your time.
Thank you so much, Vatsala. It's an amazing time. Of course, I love to talk to founders every time, but I know this time I couldn't because it's always good to interact with them. There's a lot of energy which comes in, but I
Yes,
think you bought in that energy, Vatsala. So thank you so much.
thank you so
Thank you
much.
for the opportunity.
And please do share the Excel sheet with me. I'll right away share it.
I will do that right away. Yeah.
Thank you
Thank
so
you. Bye
much.
bye.
Thank you, everyone. Have a good day. Bye bye.